Have you ever felt like the stock market is this big, complicated, risky thing that's, just for other people? Well, stick around because we're about to completely demystify it. We're going to break down exactly why you should invest, how incredibly powerful it can be, and how you, yes, you, can get started in literally just a few minutes.
All right, so to kick things off, I want to tell you a story. Because to really get the power of investing, you have to see what it's like to ride the roller coaster, the incredible highs, and yeah, the really, really gut-wrenching lows.
So picture this. It's 1985, and you decide to start putting some money in the market. Things are going great for a couple of years, and then, bam, it's 1987, Black Monday, the single biggest one-day crash in history. But you hold on. Fast forward 2000, the dot-com bubble bursts, and all these hotshot tech companies just vanish. You hold on. Then, of course, 2008. The entire global financial system is on the brink of collapse. You hold on. And just when you think you've seen it all, 2020 and a global pandemic sends the markets into a total nosedive. And what do you do through all that chaos? You guessed it. You just hold on.
And you've got to understand, during every single one of these crises, the panic is absolutely real. The news is on 24/7, just screaming disaster. Your friends, your family, they're probably telling you you're crazy, begging you to pull your money out before it's all gone. But the secret sauce, the one thing that mattered, it was just tuning out all of that noise and sticking to the plan.
So, what did you get for all that patience, for having nerves of steel through all that turmoil? Well, how about an average annual return of over 11%? Think about that for a second. That's the reward. That is the power of the market's long-term trend, which has always been upward, fueled by innovation and growth, despite all those terrifying drops along the way.
Okay, but 11% is just a number, right? What does that actually mean for your bank account? Well, check this out. If you had just invested a modest £250 every single month since 1985, your portfolio would have grown to over £1.8 million. That's not a typo. That is what happens when a small, consistent habit meets time. It becomes absolutely life-changing wealth. Convinced? Yeah, I thought so. Okay, so let's get down to the practical stuff. How do you actually do this? Forget what you've seen in the movies with people shouting into phones. You can do this whole thing right from your couch, probably in less time than it takes to order a pizza.
Seriously, it all boils down to 3 super simple steps. 1, you pick an investment platform, think of it like an app on your phone, and you open an account. 2, you pick the right kind of account. And this part's really important, because it's how you avoid giving the tax man a huge chunk of your profits. We'll dive into that in just a sec. And 3, you pop some money in to get the ball rolling. That's literally it. You're ready to go.
All right, so about those special accounts. The easiest way to think of them is like a protective wrapper for your money, a tax-free wrapper. In the UK, it's called a Stocks and Shares ISA. Over in the US, there's a similar thing called a Roth IRA. Now, normally, when your investments make a profit, you have to pay something called capital gains tax. But inside these wrappers, nope, zero tax. All that growth is 100% yours to keep. And as you can see, the UK's ISA is incredibly flexible. You can put a lot in each year, and, get this, you can pull it out anytime you need to. It's a real game changer. Okay, so your account is set up, it's in its shiny tax-free wrapper. Now what? What do you actually buy? You might be thinking, oh man, now I have to become some kind of stock market wizard and find the next big thing, right? Wrong. The easiest and, frankly, often the most successful strategy is what I like to call the beautifully lazy strategy.
And the secret is something called an index fund. It's a brilliant idea. Instead of trying to find that one needle in a haystack, that one company that's going to change the world, you just buy the whole haystack. An index fund lets you own a tiny slice of all the biggest companies at once. You're not betting on a single horse, you're betting on the entire race.
You know, a fantastic way to think about this is like the music charts. The S&P 500 is basically the top 500 chart for companies. The biggest, most successful companies are at the top, like the #1 hit single. And if a company starts doing badly, well, it falls off the chart, and a new, stronger one takes its place. When you own an index fund, you own the entire chart automatically. It's this self-cleaning system that makes them so powerful, and it's why most professional stock pickers can't even beat them over the long run. And the absolute best part of this whole strategy, you can just set it and forget it. You can automate the whole thing. Set up a regular automatic payment and just let it do its thing in the background. Someone actually did a little experiment where they invested just £5 a day. That's it, basically the price of one fancy coffee. And the result? After only 3 months, Just 3. That tiny automated experiment was already up over 5%. It just proves you don't need a huge amount of money to get started. You just need to be consistent.
So we've covered the why, to build long-term wealth, and we've covered the how, get an account, buy an index fund. But there is one final ingredient that is more important than anything else, and that is time. The single biggest mistake you can make is waiting to get started.
Let's go back to our £250 a month example. If you invested that amount for 31 years, based on historical averages, your portfolio could grow to be worth over £1.1 million. I mean, that's just an incredible amount of money. But wait, watch what happens if you just give your money 9 more years to grow. Just 9 little years. That 1.1 million turns into over 3.5 million pounds. Your money nearly triples in that last stretch. That, my friends, is the magic of compound interest. It's your money making its own money, and it is why every single year matters so much.
I mean, this chart just says it all, doesn't it? Look at the staggering difference in potential wealth between someone who starts at 25 versus someone who waits just 10 years and starts at 35. That decade of lost time is a cost you can never, ever get back. You've heard the saying, right? The best time to plant a tree was 20 years ago. The second best time is right now.
So look, we've seen the incredible long-term power, we've walked through the simple steps to get an account, and we've found the lazy strategy that wins. We've also seen the massive, massive cost of delay. The path is clearer than it has ever been. So I guess the only question left is, what's holding you back?